Hello, welcome to the weekly technical analysis review for Tuesday, March the 17th. I'm Rafi Bayajan at xm.com, and the pairs that we're going to be looking at for this week are the dollar yen, the euro pound, and the pound yen. So let's begin first with the dollar yen. Looking at the daily chart at the momentum indicators, we can see there's a bit of a negative momentum. Stochastics have turned lower, having just reached the overbought level. RSI remains in negative, remains below the 50 neutral level, though it has ticked higher today. And we can see through the price action why prices are struggling to maintain that upward momentum, because they are being capped by the 50-day by the 20-day moving average. So there is immediate resistance at the 20-day MA, which is currently at 107.17. Just above that, we have the 61.8% Fibonacci retracement of the up leg from 104.45 to 112.22. So that is at 107.39. And then we've got further potential hurdles not too far above, so around 108.30 we have the 200-day MA as well as the 50% Fibonacci, and then the 50-day MA stands at 108.71. So really, in order to get a more convincing signal that this rebound is sustainable or can continue, we'd have to see the pair cross at least above the 50-day MA. To the downside, though, if prices are unable to overcome the 20-day moving average, we could see dollar yen heading back towards the 106 level, which is slightly below the 78.6% Fibonacci. Lower down, we should watch out for 104.45. So that's the swing low from August 2019 and was a recent congestion area. And then further down, we've got the 123.6% Fibonacci extension at 112.61, followed by that 41-month low of 101.77 reached earlier in March, which if prices were to break below that level once again, it would confirm the negative picture in the medium term. And we can see that negative picture which has been developing over the past few weeks, with the 20-day MA moving below both the 50 and 200-day ones. Let's now turn to a euro pound, which is looking rather positive lately, both in the short and medium terms. We can see that the pair has now reached the 78.6% Fibonacci of that downstretch from 0.9320 to 0.8276. So that's around 0.90 around the 0.91 level. It had reached a 7-month high yesterday. So if this positive momentum continues, which it's looking likely, looking at the momentum indicators, the RSI is still above the 70 level. The MACD is rising steeply above its red signal line. So the prices could soon reach the 0.92 level before aiming from that high from August of last year of 0.9324, and that would confirm the bullish structure in the medium to long term. If though we were to get a near-term correction, given that perhaps prices are looking a little bit overbought at the moment, the main support to the downside is initially at the 61.8% Fibonacci at 0.8923, followed by the 0.88 handle at the 50% Fibonacci. And finally, let's now turn to the pound yen. A bearish picture in both the short and medium terms. We can see the 20-day MA, 20 and 50-day MAs are sloping downwards. 20 MA crossing below both the 50 and 200-day ones. And looking at the momentum indicator, stochastics are stuck in oversold territory. RSI also below 30 as well. So There is the possibility of an upside correction in the near term. For now, though, the picture is very much bearish. So if prices continue to slip, the next major support should arrive at 126.60, followed by the 124 handle. If though we do see a bit of a turnaround, prices would first have to overcome the 131.10 level, which has been both support and resistance in the past, and then we've got 133 level where the red 10-count trend line of the Ichimoku cloud currently sits at, and then 135.55 level could also act as a resistance, but then it would soon meet the moving averages as well as the Kijun trend line, so we could soon see a potential obstacle around 137 if pound yen was to attempt to recover. So that's it from me. Thank you very much for watching and have a great day.